Today is the civic holiday long weekend, and I am going to do a little bit of a special video. I will be going through every single holding that I own and my, just what's going on. So, Apple's something that I've been up on quite extensively, about 26%. My average is $144. I have 15 shares. This is something that I haven't been buying because I would like to acquire more Apple through Berkshire Hathaway. So as I invest in Berkshire Hathaway, I will be also investing more in Apple. Next up, Algonquin Power. Awful. Absolutely awful. I didn't take a look at the debt. This is something that is just a bit of a weigh on my portfolio. It is something that has a PE ratio of negative 150. They are struggling, to say the least. They have a lot of long-term debt that has a high interest rate, and they are just sort of not doing very well as a company. It would have been nice to buy them at $9. I did buy them below their historic average, so my average is $16, which is below their medium line of about $17.50, $18. But that was not enough, and they, even though pay me dividend, are still a bit of a failure of an investment. For now, let's see if they can pull through, but I have not doubled down on them strictly because of the debt they have. So we're going to see what's going to happen with Algonquin Power, but we're just waiting on them. Going back, we're going to go to Alibaba. Alibaba is kind of a weird holding for me. It's my only Chinese holding. This is actually a Chinese holding company share that I own, kind of like a CDR. I guess not really like a CDR. Just I own shares of a holding company that holds Alibaba. So it's kind of a weird process. It's a little different, and I am down 12%. That's actually pretty good. It used to be down about 40 to 45%. So Alibaba, okay, not the best. China is slowing down. We'll see what happens. I'm not going to put any more money in. I do have 11 shares, or about $1,300. So if I do the math right, it is just $1,200. So nothing really here to say about Alibaba. My average is $110, which I thought was pretty good at the time. So yeah, damn. BlackRock, which was the most recent company that I bought, I am up about 13.6%, or $680. I did buy about $5,000, 8 shares worth of BlackRock at a fairly even number, I guess. What's my average? $625. So I was looking for this at, I believe, $550. I didn't think it would get there. It's been a while since I looked at the company. They were below their average PE line, which for some reason Wealthsimple's having a really hard time right now loading any pages for me, so that's unfortunate. Anyways, I did buy them about 30% down. This is a company this is the first time I bought something outright in a large way. So I just bought all 8 shares at once instead of averaging in. We'll see how that goes. I do believe that at $625 they were about 18 PE. Just an average. The price to earnings, just a very simple way for me to look at it. I look at the charts too. I look at the RSI. I look at a few indicators that they're doing all right. I look at their debt. I look around. So I wouldn't say I go as in depth as maybe some other people with their discounted cash flow calculators, but I just take an eyeball guess at a company that's going to do hopefully well. And I say hopefully. I do plan on this company doing well. I plan on them paying out dividends and increasing those dividends by, they've been doing it by about 13%, or rather 7% yearly, which is still beating out inflation. So, this is a long hold for me. BlackRock is known for knowing everything. They're also known to make money. So that sounds like a fantastic investment. Bank of Nova Scotia. This is another one I bought outright. But not in a very big way. This is about $2,000. I'm down 2.5%. I believe my average is $66. Yeah, $66.01. I thought that was a pretty good deal. Actually, it's still historically low. So I'm sitting on it. I'm holding it. If it went down in a bigger way than just 3%, then I would take a look at buying a little more Bank of Nova Scotia. This is also a bank that I bank with. So this is a little closer to home for me than usual. So a lot of these companies I don't really have any vested interest in. But, you know, Bank of Nova Scotia, if they collapse tomorrow, so does my savings account. So, you know, there you go. Berkshire Hathaway B shares. I am up 26% on this position, or $800, and that's 800 American, so that's USD. I have 3,000. I have 11 shares, so $3,800 in Berkshire Hathaway B shares. This is 8.8% of my portfolio, and this should be way more. I am actually looking at, I am actually looking at doubling down on Berkshire Hathaway. I would like to have, you know, about $10,000 in, and I'd like to do it at about 300. So I know I might not hit 275 like I wanted to, or 276 like I wanted to, but if I caught it again at 300, I'd be very happy, even though I'd be increasing my portfolio average by a few percent. I would much rather that than just have it as an under percentage in my portfolio. So I'm still looking at it. I'm still waiting. I do believe that the price to book ratio on Berkshire Hathaway is still a little frothy for me. So we're waiting on Berkshire Hathaway. I'm also 26% up, so I'm not about to average up in that big of a way either. Caterpillar. We might just skip Caterpillar. I am up 37% on Caterpillar. I did miss the dip. I am actually very disappointed. There was a dip at like pretty low, I believe about $200, where I should have been buying. I did buy it at 200. Yeah, it went to 180. So, damn, you know, I should have bought more. I just completely missed. I don't know if I just wasn't looking at the markets at that time, but I missed the boat on Caterpillar. There you go, still recording. Dream Industrial, DRI, I'm up 13%. This is just another REIT that I've been averaging into. This is also one that I should be putting the money that I've gained from the REIT, the yield, back in. So they should be paying me about 8 shares per year, and it has been about a year, so I should be putting some of that money back in. I should be collecting more dividends and letting that snowball effect work on the 120 shares that I have. Yeah, so 4.5% or 5% rather. So I should be buying about 5 shares per year, maybe a little more per year. So, you know, maybe at the end of the year I'll just buy them all at once and then continue that on, but I should be doing that monthly. I need to be more diligent on that. Moving on, Dollarama. Dollarama is just one of the first companies I bought, which is super unfortunate. I'm up near 60% on Dollarama, and I only have $350, only 4 shares, which is such a shame. I have an average of $53, and right now it is $85. So just something that I missed. It's got a very high PE right now. It's got almost next to no yield, so I'm not obviously not holding this for the dividend. But if I could, and I would like to buy this at $65, $70, I would like to. Maybe closer to 65 than 70. So we're going to hold off. Dollarama, I do believe, is a fantastic company. They have a strong margin of profit and price stability. I mean, they're a cheap shop, and they can increase their prices, and people wouldn't think too much of it. I mean, if you raise something from $1 to $2, everyone's going to complain. That's a 100% increase, but it's still $2. EMP.A, again, just another one. This is one of the last stocks I doubled down on. I have $560. I would much rather own Dream Industrial, or maybe Loblaws, because this is kind of a, this is kind of like a food distributor slash REIT slash, they have a few things going on here. So I'm not totally versed on the company. This is maybe a buy that I shouldn't have done outside of my comfort zone, twice actually. So I'm a little more reluctant. I should be doing more digging into the company. They have a PE of 13, which for a REIT has been historically high, but I got to take a deeper dive into Empire.Co. Yeah, we'll leave that as I don't know enough. Google, I'm up 10%. I have 50 shares. This is a company that I bought a little high. Actually, I averaged down in quite a major way through, owning Google. So I do have an average of $116, and that used to be $125, which is when I thought it was going to be a good deal. I believe the share price at the time was about $3,000 or $2,750. So I did jump the gun quite a bit on Google. Damn, I'm still up 10%, but that could have been a lot better. I should have been a little more patient. Home Depot. I have 2 shares of Home Depot. You know, I'm up 6%. It's pretty close to how much it is. I believe $300 when I bought this one, so we won't dig too deep into this. I would love to buy more Home Depot, just not right now. I'd like it to be lower than, you know, I'd like it lower than 275. If I seen it hit 250, I would drop the usual another probably $1,500 in. Intel is a company that has just been a bit of a heartbreak for me. I'm actually up 4.9%. So I've been up for a little while on it, not by much, but that is at the expense of being down almost 40% for like close to a whole year. So a whole year of no movement, and then it just kind of shot up all at once. My average is 33.75. So that brings me about here. Damn, we're just getting out of the hole. It is low historically for its 5-year, which is why I'm here. I also, you know, like Intel. I am a bit of a gamer. I don't think that Intel is going anywhere. I think they make decent parts for computers at reasonable prices, and I believe that you need a company like that. It can't all be like Nvidia making the most high-end stuff. You know, for every keg you also need a few McDonald's. Meta, a company that I bought, I'm 65%. This did take the highest in my portfolio for gains. I'm up $1,222, 64.85%. Damn, I have 10 shares. I actually messed up when I bought this company. I bought a limit buy when it fell like 40% in one day. That was brutal. I filled my order at like 250. I was down 40% in the first day that I bought this stock. So that was brutal. I did end up averaging down in quite a large way. So I got, you know, I averaged down. This is a bit of a success story for that, although I was down for a majority of the year. So, damn, it sucked. It really hurt that first day. Yeah. Meta. Facebook at the time, FB, if you will. Manulife Financial, just a solid dividend payer. Somebody who I actually used to invest with through Purdy, through one of my other companies that I used to work for. They pay a good dividend, about 5%. They do overpay out if you ask me, but they also have a very bad habit of bouncing off of $27. So I'm not exactly ripping over to buy it right now. I'm gonna wait for a dip and pick it up when the yield is a little higher. Microsoft, I own Microsoft. I also play a lot of Microsoft games. That's basically why I own this. I do believe Microsoft's not going anywhere. I don't have to know the business entirely to know that it is a bit of a staple when it comes to operating systems, when it comes to games, when it comes to all sorts of stuff. So I own Microsoft. Just a little piece of my portfolio. I'm also up 24%, and I bought at $263. NEWT, I don't think we're going to go into NEWT. This was also one of the first companies I bought. I did end up averaging down on this one, which was just using the dividends that they gave me. I am down 26%. That used to be 45. So again, one of the, when I was new to investing, one of the ones that I was new to. Nexus REIT is just like Manulife. They pay a good dividend. I'm actually down 15%. I didn't even realize I was. So yeah, my average is $9.61. Right now it is $8.11, and it pays almost 8% yield. So I would like this $8.11. I would like this to be about $7.50. Did it hit $7.50? It hit $8. So I'd like this to be about $7.50 before, you know, it'd be nice if it hit $5 or $6, but I'd like this to hit at least $7.50 before I start looking at it to buy it again. So I am looking at it. It is a good, dividend paying. They do have a very, I'd say they were a very stable company to own at one point. So I would like to buy them again. See how they go. SRU, we're not going to talk about that. I'm 14% down. Nothing to see there. I again, that was advised to me from a friend, and I would say, even though I bought it, I'm still not entirely sold on smart centers. VIG, Vanguard, this is just an ETF that I own. I kind of look at this the same way I look at Berkshire Hathaway. This is just a Vanguard dividend appreciation ETF, which if I'm going to own VIG, I might as well own XEQT. So I've been putting my money into XEQT instead. And I know that seems maybe a little weird. I guess I could split up the money, or I could sell VIG and just move all that money into XEQT, but no, I'm not going to do that. I'm just going to leave it as is. It does own Home Depot, Microsoft, just a few stocks, Apple that I already own, but just have something that also doubles down on those stocks. So it's not hurting anybody by being here. Walmart, I'm up 19%. I bought this fairly early on as well. We'll actually go into that. Walmart, $132. It did have like a 10 or 15% dip at one point. Yeah. So I probably could have bought the dip on Walmart, but I still think that it's pretty inflated. It's got a PE of 38, and I just don't see Walmart doubling in size in the next, 5 years. So, sue me if that's what you think, but Walmart to me is just a very stable company. So I need to buy it when its yield is a little higher than 1.4. Moving on, XEQT, my last holding. This is the ETF. This is the catch-all. Just like Berkshire Hathaway, this is just a very broad-based ETF, one that I've been funneling as much money as I can in, not really, and it's also one that slips as percentage of my portfolio. So this used to be at 27% of my portfolio, and without touching or buying anything, it has dropped to 22. So a 5% drop in my portfolio, it is only up 3% when everything else is up quite a substantial amount more, almost twice as much as the 3%. So this is an ETF that I will be buying at a better price. So right now we're very close to all-time highs with the stock price. I would like to catch it quite a bit lower than that, and I would like to do that in a very big way. So I have about 13,000 on the side. That could be about 16,000 on the side when I max out my TFSA, and that money I would love to go into specifically Berkshire Hathaway and XEQT. Probably 6,000 in Berkshire Hathaway, 10,000 in XEQT. But we'll see what happens when I get there. Anyways, guys, that has been the entire portfolio, every stock that I own. Oh, and the non-registered account, which is minus 2.8%. This is the new account that I have. This is just penny stocks, 10 cents or less. We're going to see how it goes. I see a lot of movement there today. One of them was up 40% at one point for literally 1 second. So high volatility, high fun, high risk, it's only $50, and it's $25 every 2 weeks. So this is just a fun portfolio. That's it. That's the entire portfolio, guys. Thanks for watching. And if you did make it this far, please like the video. It goes a long way. Subscribe to the channel, and I'll see you next time. Bye now.